Welcome to the Vision by Protiviti podcast. I'm Joe Kornik, editor-in-chief of Vision by Protiviti, our global content resource looking to the future to examine big themes that will impact the C-suite and executive boardrooms worldwide. And we're discussing the future of money and its implications globally, as today we're focused on Africa. We have three outstanding financial executives from across the continent joining us today, and I couldn't be happier to welcome in Chanda Lumpa, member of the Supervisory Board of Oiko Credit, Netherlands, and VP of the Institute of the Directors of Zambia.
Thank you so much for having me. Thank you so much.
Also joining us today is Sepo Haihambo, Executive Officer, Commercial Banking, FNB, Namibia, and former Head of Global Markets for Rand Merchant Bank.
Thank you for having me. Excited to be talking about the future of money.
And we're joined by Faith Khanyile, Director of Companies and former CEO of WDB Investment Holdings, as well as the former head of corporate banking at Standard Bank Group.
Thank you very much for inviting me. Looking forward to the discussion.
Well, we've got, believe it or not, more than 75 combined years of finance, banking, and business experience on this panel today. So I'm really excited to get started. And I wanted to start sort of from the macro perspective and talk about sort of where we are today and the many disruptors facing the financial sector right now, specifically in the fintech space with sort of digital payments and cryptocurrencies, and now even, generative AI is into the mix. What do you think it all means for the future of the industry?
So, look, I think three things come to mind. I think one, as money becomes more digital, you're going to have greater integration in terms of people's everyday lives and how digital payments assimilate into that. And right now, a lot of it is maybe very business to consumer, but over time, it'll also become business to business. And this is going to mean that as banks, we're going to have to look at faster speed of integration as innovation continues into our existing business models, which means continuous investment and capital expenditure to make sure that we're ahead of the curve, maintaining the existing legacy models, but also building into the future with the investment in technology. So expensive from an investment perspective, but really going to require faster adoption given the speed of change.
Maybe if I may add to what Sepo is saying, I also think there will be opportunities to promote more inclusive finance, especially in emerging markets like, for example, South Africa and the African continent, where we still have the big part of our population having challenges accessing financing, accessing credit, but at the same time, we do have a high adoption of for example, smartphones, and now also data is becoming more accessible and more affordable. So I definitely think that AI and specifically fintech can promote more inclusive financing, and also specifically for small businesses, which they require credit, and the old traditional way of accessing credit via banks has been quite expensive, and also just not that friendly to small businesses.
The future of money is trending towards what uh, I think Sepo talked about in terms of digitization. And it's more about convenience, making it convenient. I don't know what paper money will look like in the future, if at all, but certainly digitization is going to run out the number of ATMs that we have because of that particular instance, and even payment systems themselves. will continue to be more and more cashless as we go, so that we see that there'll be more focus on convenience, more focus on inclusivity, and that will also require much more security in terms of our banking systems or whatever system we're going to use money on the global platform, even locally, domestically.
Right, and I heard you all sort of in some way, shape, or form talk a little bit about equity, and I think one of the promises of the future of money is that it perhaps will create a more equitable global environment for the financial sector. Do you see that as a real possibility and one of the opportunities in the future?
I think it's a yes and no question, because basically leveling the playing field would be tantamount to people having the same opportunities, equal opportunities, and equal, shall I call, access to finance. Yes, as much as the level playing field will be there in terms of the mode of using this money digitally, there will be some areas where there'll be less equity than others, and especially when you look at the south-south divide, or the first world and second world, definitely in more African countries we'll see that cash is more of a leveler than it is elsewhere, where you find that you can't even pay using cash. You have to have a card, you have to have a debit card or a credit card. So it's a yes and no question depending on where you are.
Yeah, and I mean, I think to add is that I think we do have to also deal with some, fundamental issues around the allocation of capital, because I think right now, we do have issues around the diversity, sort of like the profile of the allocators of capital and then the managers of capital as well. And I guess also within that, we've got still sort of like old ways of really looking at who gets capital. So I think, technology, fintech alone, cannot solve some of those fundamental issues around, who is allocating capital and to whom are they allocating capital. Because I think one of the biggest challenges that globally we still have is that, we have not really had the kind of transformation that we need at that level of capital allocation and capital and fund management, which then can trickle down to making sure that we then achieve equity in the access to finance. So I think we do need to deal also with that issue, because then if we can deal with that issue, then we can then hopefully see more equity in who is accessing finance, be either be women or small businesses. But I think as long as we don't have that, and then also we don't deal with some of risk appetite issues, I think we will have a challenge. But I think obviously, fintech and technology or the digital revolution will definitely, open up opportunities. But we do need to deal with some systemic issues as well.
So what I would say is I agree with Faith and Charity that at the end of the day, digital money is still money, so it must be earned. And if the earning potential of the individual, the company, of the country isn't enhanced, then it doesn't necessarily increase access. However, having said that, I think with the increase in digital solutions, you're going to have more straight through processing and real time settlement of transactions. And this being done, via people's cell phones, etc., has led to new credit models that perhaps wouldn't have been used even 5 years ago. I've read case studies, where they look at the behavioral pattern of when a person buys data for their mobile plan. Like, like, are they responsible? Do they wait till they've finished every last bit of data and voice time before they top up? Or are they very prudent and like when they're 50% utilization, they go and they top up and they're kind of using alternative credit models that weren't available to us before we had AI as an input into credit models. But ultimately, we still need to solve in tandem for the quicker, better, faster solutions. We need to in tandem solve for the income potential of the individuals, the companies, and the countries, etc. Otherwise, you build for a very limited market.
I think we're all in agreement that money is going digital, and clearly the future is going to be some sort of digital currency, which opens up all kinds of new issues potentially. I mean, there are opportunities certainly, but then there are also some challenges.
100% cashless society would need, for that to be adopted, you need that to be government led. Um, so I suppose there are valid concerns around the privacy, and the conversation will probably be based on the analysis of the positives and the negatives as on a whole, and on a balance what society seeks to gain if we go fully digital with no cash globally. I mean, like for example, I mean, I think enhanced tax revenue collection could be one of the possible gains. But with regards to the privacy concerns, what I find interestingly enough is that this tends to also be linked to generational concerns. And you find that the younger generations from your Gen Zs and below they're not as concerned about sharing their data. There's more the interest in understanding why their data is being taken and what it would be used for, but happy to share the data if there's understood benefit for them at an individual level. So I think as time moves on, the adoption of fully digital money will probably get easier as the younger generations come into the active economic workforce.
Yeah, I think one of the other consideration is obviously on regulation. Um, I think governments really need to get their heads around how do they regulate this new uncharted territory to protect the privacy of the individuals, as well as and obviously the data that is being shared.
You've all sort of touched on banking, and we have so much banking experience here on this call. I just wanted to ask a little bit about sort of the future of that sector, and what do you see as sort of the major challenges in banking?
I think for me, banking especially is a very highly regulated sector, and that always causes problems for banks, especially when it comes to meeting some regulations that actually negatively or adversely impact the ability to provide great service to customers. And so regulation needs to be measured, because keeping up with these regulations can be a challenge. It's a cost, especially for smaller banks. And so, to overcome this, a bank needs to implement really robust risk management systems, and also invest in technology that supports their regulatory reporting, because that tends to be quite high. And really having a proactive stance when it comes to compliance. It's quite a cost in terms of a bank to meet all these regulatory requirements. And so, yeah, for me, that's one area that I see is quite a challenge for the banking sector in years to come.
I would add that the significant cost of compliance is definitely a key item, and I agree with Charity on that. And then you also have the cost of guarding, protecting your client's money because of the cyber risk investment that has to happen alongside with the large capital expenditure that banks will continuously need to plow into their systems to make sure that they've got fast adoption of new technology as it is developed, it's making the cost of doing business relatively high. So what I expect you'll see in the next 5 to 10 years is a lot of consolidation. I think we're definitely seeing that in the African banking context. So lots of consolidation, fewer players, but bigger players because of the cost of business in banking continuing to escalate with compliance and investment in technology required.
We have seen changing customer behavior and expectations in the face of what we just discussed, security and cybersecurity threats. So, with the increasing trend of technology, digitization of financial transactions or banking transactions, the risk of cyber threats, even data breaches, it becomes a really significant concern for banks. And to keep their customership, they must now continue to enhance their security stance, their security measures, and implement stringent cybersecurity frameworks that are not cheap; they're quite costly. And ensure there's also a very robust, what I would like to call incident reporting systems to allow customers feel that yes, when it does happen, the bank will be there to help them. But all these are actually quite costly uh, investments for the bank. So collaboration is going to be very key between the banks, between regulators, law enforcement agencies, in terms of combating cyber crime. And then customer behavior also needs to be factored in, because the banks need to transform the experience of their customers by providing seamless, personalized, and omni-channel services. Because really, it's not just in the good old days you go to the bank and then you get served. Now you have to get your banking wherever you are, and mostly it's on your handset. So banks now need to adopt a more customer-centric digital strategy when it comes to leveraging the data analytics to understand customer preferences, behaviors, whilst ensuring that they're protected.
Yeah, and also I think the other one is that, but definitely banks are being disrupted by fintechs. I mean, it's like they're being disrupted left, right, and center. Yeah, and you can see, banks are now entering the fintech area, and they've got these legacy systems and costs that that are just difficult to you know, dissociate from. And so I think, yeah, that's definitely, I think that trend has been going on now, for the past probably like 5 to 10 years. So that is a real reality. And so, but you see banks partnering with fintechs or investing in fintechs. It's actually fascinating to see what's happening in South Africa at the moment.
So Faith, play that out for me over the next 3 to 5 to even 10 years. How do you see that sort of those partnerships and those collaborations? How do you see those impacting the sector, the industry?
I think that the industry is definitely going to be totally, totally different because it's not just the fintechs that are playing in this sector. We also are seeing telecoms companies also, because they've got the customer, they've got the data, they really have got the cream that you want to then offer financial services into this huge untapped market on the continent. So I think it's going to be I think over the next 10 years, your traditional banks, like, your Standard Bank, your Net Bank, your First Rand, they're going to be, yeah, I think it's going to be very tough for them, because I think they're going to be meeting competition from all angles, from their own clients, from their service providers, so it's gonna be quite different. And I guess the regulations must obviously keep up, with the changes. And I think what we're seeing in South Africa is that the regulations are a bit sluggish, but that is not stopping innovation. I mean, even retailers, are offering financial services to their clients. So it's going to be a totally, totally different industry over the next 10 years.
I wanted to talk about Africa a little bit. It wasn't too long ago that some were predicting that Africa could sort of be the next China, but economic growth has slowed post pandemic. But key demographic changes still signify a lot of economic opportunity. And since we've got three different countries represented here, I did want to ask a little bit about from a financial standpoint, from an economic standpoint, and its positioning on the global stage. Where is the continent today, and where do you three see it going in the future?
Africa is a very diverse continent. I believe at any given time, there's always pockets of growth in the continent. What you do find, though, I think there is still lots of potential untapped opportunity in the continent. I think following COVID-19, with the supply chain delays that were experienced globally, this trend towards reshoring is making a lot of manufacturers and countries reconsider how they acquire raw materials, which I think is creating more direct demand for a lot of the raw materials that are produced in Africa, and also the move towards renewable with these rare minerals that are required for batteries, like like your lithium, as an example. So I think from that perspective, there's definitely another growth wave that will come through in the African context. And then you've got the added complexity of these conversations around de-dollarizing trade in Africa, which then could also be very beneficial towards the value of these African currencies. And then at the same time, you've got African leaders coming together, having a conversation about the Africa Free Trade Continental Agreement, which would enhance trade, south to south trade on the continent. So I think those opportunities do exist, but it would be irresponsible for me not to highlight, though, that the issues in the challenge in adopting new technology is being outpaced by the speed at which we're developing our skills and infrastructure to be able to support that future. So it's almost like the two things need to happen in tandem for that full potential of the continent to be realized.
Yeah, I mean, I think, to Sepo's point, the opportunities are definitely still there. And I mean, I think if we look at the latest AFDB Africa Economic Outlook for 2023, it's very clear that Africa has definitely been resilient. Again, here, we need to understand that Africa is not one country, but just a macro. So the continent has definitely been resilient post-COVID, and the economic growth has recovered, completely. And I think for 2023, the growth is still projected to be just close to 4% actually, but I have not seen the latest IMF um, outlook, but that was from the AFDB. And then for 2024, the continent is projected to grow by 4.3%. So, and then, we talk about obviously the population and the youth dividend, that those opportunities definitely have not gone away. But obviously, I think we've had headwinds uh, due to the war in Ukraine, which has led to high food and energy prices. So, most of the countries in Africa are battling very high levels of inflation. Then we've had the increasing interest rates in the US, and the strengthening of the US dollars have definitely impacted those countries that have borrowed heavily, from using US dollars. But I think the key opportunities right now, actually, that we need to leverage as the continent revolves around sort of like what now is being termed the green economy. And then there, I mean, the numbers are just staggering. I mean, apparently, the opportunity ranges anywhere between $2.6 trillion to $2.8 trillion that is required by 2030 to take advantage of this, green economy, anywhere from investing in renewable energy, investing in, water infrastructure. Obviously, health and education are still big opportunities, on the continent.
Africa is the happening place. I think all major developments will take place in Africa, if I can say so. Why? Because we have a very youthful population in Africa, a growing middle class, and we have abundant natural resources, increasing urbanization, which may be good or bad depending on how you handle it. And all these actually are significant opportunities for economic growth in the next 5 to 10 years. And we need to make progress as Africa at both country and continental level in terms of infrastructure development, because um, as we've seen across Africa, many countries are investing heavily in infrastructure development, which will include energy, transportation, the green economy that I think Faith was just referring to, and telecommunications. But we also need to improve connectivity to facilitate trade and ensure that we attract direct foreign investment. When you look at Africa right now, just to cross from Zambia to Malawi, I had to go to Johannesburg. Okay, so that interconnectivity is not there. For me, I cannot jump on a flight today and go straight to Nigeria, for example. I have to hop onto another flight, get to another airport, and sometimes even go to Europe to come back down to Africa. So interconnectivity needs to be sorted out, especially when it comes to regional integration, in order to boost our inter-African trade and increasing investment flows that will foster economic cooperation. And if we can also ensure regarding renewable energy investments, that this focus in Africa should be driven by the need for sustainable development in terms of wanting to mitigate adverse climate change um, developments. And as you know, we have vast renewable energy potential, especially in solar, wind, and even hydroelectric power. So I think Africa is the happening place, and really our economic trajectory is going to be influenced by a lot of combinations such as domestic and global factors, and with the right leadership. And I can't overemphasize that we really need bold leadership that will look inside Africa for African solutions that will be provided by Africans within Africa with as much help as they can get. But really, we can't keep running to the first world for help when we have significant resources, both human capital and otherwise, on the continent that can come up with African solutions.
And Faith, Charity, and Sepo, thank you so much for your time today. I really appreciate the conversation.
Thank you, Joseph. It was really good talking to you.
Thank you so much for the opportunity.
Thank you very much for the opportunity. Thank you.
And thank you for listening to the Vision by Protiviti podcast. Please rate and subscribe wherever you listen to your podcast, and be sure to check us out on vision.protiviti.com for all of our content around the future of money. Thanks for listening. On behalf of Faith, Sepo, and Charity, I'm Joe Kornik. We'll see you next time.